The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
every day. And of course, what a pleasant day that we have out here. And why is it pleasant? It's because I've been proved wrong in the short term, but that also means that we have kind of an interesting market. And what does that mean? It means that you can almost put another tab on there that the end of the bear market is here. At least that's what you'd believe if you listen to a lot of people. I'm just thinking that what I was looking for happening this week gave us a big sign that it wasn't going to happen. And we can look at the fundamentals and then look at the charts and figure out which one makes your bank account better. But now we can start looking for some light volume retraces and start buying those as they occur. Now, today we've had some stocks go up on very, very light volume. And it's not uncommon to see this. I probably don't talk about this enough, but even when we go back to I think it was the 2003 low, whatever it was, 768, I think, on the S&P cash, and started moving up higher from that. There wasn't any volume until we got pretty much into, I think, around 1050. No one believed it. No one would buy it. No one would touch it. And we may have that exact same thing happening here, but I won't worry about these trades that I have, which I covered all this morning, but I will worry about trying to buy stocks with light volume retraces now and wait to see that we get some kind of another sign. We've had a market that I guess, like they say, the trend is your friend. The trend has been every time the market has been weak to start seeing the Fed go out and do something, and I think maybe this pullback is now over with the Fed probably implicitly taking off all rate hikes of the rest of the year. That may have been enough to actually stabilize some of the commodities, and we'll have to continue to look. One of the other things that I dislike about this market is the kind of the collapse of volatility in the dollar index, just off a nickel at 97.41. Had every ability to start running the last 2 days, but it looks like there is a wall of the Treasury who's more than willing to throw helicopters full of cash at that Forex market to make sure that the dollar index is kept really rather low. But that's it. Andy Heck is chiming in from the Peanut Gallery. He says, can you mention my workshop tonight? 7:30 to 6:30 to 7:30. Every year is an adventure. Agriculture in 2016. He's going to set you all up for what is going on in agriculture, I guess, before the planting season starts. And as I said, the planting season may be coming a lot sooner than I thought in this market. In stocks, too. Again, we need to wait until the right time. But, we get a nice light volume retrace in this market. We might have something going on to the upside. Anyway, 2.5 billion shares. This morning, we had a very tough time getting any kind of volume. It was into 1 o'clock before we had 2 billion shares. Volume starting to pick up now that we got above that 1935 level in the S&P cash. Could this just be a temporary thing into fund buying next week? I think it could be. But it looks to me like we probably would have had a lot of stocks fail that did not, that were up on light volume today. If, even then, you can't push too many stocks that have are going up against million share days with 200,000 shares and still go higher. When in doubt, get out. And that's what I did. In the meantime, it's time to get this little party started with a little bit of a digression.
That it's all just a little bit of history repeating.
It is a little bit of history repeating on this day in 1848. Harriman, Edward H. Harriman, is born in New York to a minister and his wife. He starts on Wall Street at the age of 14, working as an office boy in a brokerage firm. Harriman marries into a railroad family and by age 50 commands the Union Pacific, the Southern Pacific, making him one of the most powerful railroad barons in the world and at all time. Of course, probably the biggest single event ever in the stock market. Not seeing my slide. For some reason, this little thing did not work. It didn't work again. Why is that? Still application, still window, timed application, timed window. Okay, for some reason, the thing reset. Hopefully this will do it. Did I do it correctly? I did not do it correctly. Here we go. Now we should be all set. Don't know why Hotcom reset on me, but it did. Anyway, we're talking about Harriman. To the Union Pacific and Pacific Railroads, of course, if you studied stock market history, you would have seen a great deal. And I don't know what else you can say about it. Okay, now he's caught up. Unfortunately, they type very slow back to me. Union Pacific, in 1902, the biggest, and probably the reason why we have all the laws we have today for anti-competition. In 1902, Harriman went toe-to-toe with the other big men of Wall Street, trying to get the last bit of track that would hook up the major railroads and therefore be the choke point for all of this. Anyway, huge doings. By 1904, we started seeing antitrust legislation work its way through, and they busted up all the railroads that he put together in 1902 and 3. Massive volatility, huge displacement in the marketplaces, and actually caused all kinds of havoc in the stock market, pretty much up until his death in 1908. On his day that he died, though, the railroad average fell 3%. As one of the last big barons of Wall Street moved out. Other things going on out here. One of the things that's probably most interesting is we are breaking some of the trading relationships that we've had. The Shanghai was down 6%, and we're up 0.7%. We look at crude, kind of the same thing, too. It was down 2% earlier. Didn't seem to really affect the markets at all. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Interesting congressional testimony today. I didn't get a chance to sit around and watch it or try to find it. But I did see that Walt Disney, DIS, was in front of Congress today. If you live down here in Florida, I hear the ads all the time now, and that is if you've been fired and forced to hire your replacement for somebody that has been moved in from out of the country, then call us and we'll make sure and sue them. That's kind of like the national sport down here in Florida. Every bus has a ambulance chaser on the side of it. Every bench for a bus has one, and you can't turn on the radio or the TV without seeing incessant ads for either politics or the lawyers, personal injury lawyers. This is something that they have now. But it looks very interesting because I think they got Disney by the short hairs, as they say. It's Disney's flat today at 95.39, but it's not uncommon to see, individual stocks like this become tied to the whipping post in a political year. I would just be very careful about it for headline risk. You can still look at the charts, but I would probably stay away from it just because it looks like they've been caught. Let me put it that way. I read the pre-testimony this morning, and it certainly looks like they did exactly that. They fired people, made them train the people they were retraining, and brought them in from another country to work for half the price of the people that were there, and basically lied on the H-1B visa program. And I think that could probably, especially with both Trump and Hillary, probably could be a very big thing as we go through the election season. One of the other things that just scares the bejesus out of me is the huge amount of auto loans that have been out here. The St. Louis Fed put this out yesterday, and it is quite illuminating. I don't think that we're going to have a huge move in the auto industry this year. unless it's down. But if you look at the amount of auto loans and the auto loans today compared to the crash of 2008, we're in the neighborhood of getting about 30 to 35% higher than those levels. And all I can remember is driving by on I-70 and seeing lot after lot after lot with repossessed cars around that time going through or around St. Louis, driving, I think back down here or something around in 2008 for vacation or something. And I'm going, what are all those cars there? They're all used cars. How can you have that many cars? Well, we have a ton more. Any kind of recession could put a huge hurt in that business. But as we closed Q4 of 2015, $1 trillion in auto loans compared to a little over 800 billion back in 2008. And, of course, a little bit of the hair of the dog, I guess. Yes, I'm thinking about Repo Man. I love the movie. But this is another thing I thought that was very, very interesting. Anyway, we're going to get to charts fairly quickly today. You can call me at 877-927-6648. And we can move on. I think I had a few stocks out here. Wanted to look at, wasn't it Target? Target was setting up a Gartley pattern, and I wanted to see how this was setting up. Come on. Okay. Yeah, for some reason I've been having problems with my internet connection for data for the last couple of days. Let's see if that doesn't get rid of it. That was the Gartley pattern coming in today. And you know, you had a huge day yesterday for volume. What's that? What? TGT. Target's up 2%, 78.35. The bearish butterfly basically up to that. What was the high of the day up here? 78.56. So you're within 3 cents of the D target out here today. Entered on this leg on the right-hand side of the chart, pretty much equivalent to the down leg that started on January 7th. Let's see if we can't get back to this. Is that 24th? We need to get to the 25th. There we go. Yeah, we're kind of through that today. Not a lot of volume today, though. 4 million shares compared to the 15 million shares yesterday. So that may be done with that Gartley pattern there. See if we can't bring it up again. Yeah. Who can say? Maybe this will get it. Come on. If I just click a lot, maybe that'll help it out. Okay, well, it looks like I'm going to have technical troubles today. I will have to go back to my data from it yesterday and just wing it here. Wanted to look at some of the stocks that were actually moving and seeing how those are out here. Bud up, not up, off at $2.50. It's off 2%. Of course, the big mover in the NASDAQ is CRM Salesforce. It's up almost 9%, up $5.40 today. Many comments about Domino's Pizza being up today. It's up 12%, up $14.71 at $132.23. A couple of these other ones, most everything had been moved down fairly brutally. NTES. See, we got that. NTES. Here we go. This is down on fairly heavy volume. It's headed back down to its February 9th low, 129.60, 1.1 million shares. We've got 3 million shares already back for NetEase. And I don't know if you can say a lot other than that. Let's take a little bit bigger look. So you've broken that level. You're probably going to break the 129.60 level. That gets you back down to the next major gaps, which are at the 110 level. So we'll take a look at that. Now let's take a quick look at CRM too. CRM. There we go. Anyway, I guess we're out of time for this segment. We'll be back in a second. We'll look at Salesforce as we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Looking at Salesforce today, it did get up to $70.84. Of course, it had some fairly decently bad reactions to its last earnings call. And nice little bounce out here today. You would certainly want to see a great deal of volume. That's what I think, that there is probably some retrace in a lot of these stocks for a buy signal in them. But volume so far is not bad. This thing had a ton of gaps on the way back down, and of course the huge. But it's basically one of these things where anybody should be able to make their numbers anymore, because the numbers have been moved down so drastically for most of these stocks. Unfortunately, for earnings last night, I think 18 of the 20 that I looked at were lower today, and still are fairly lower. Some of the other ones that have been eviscerated are like rate. Bank rate just blew up. I didn't have a chance to find out what these guys said, but I think I got to find out. Bank rate crashed after earnings. Why? Shares of the personal finance website Bankrate crashed 47% early trading Thursday as investors reacted to the company's earnings miss. Bankrate reported net income of $4.8 million, down from $10.3 million the same period a year ago. I thought these guys were a lot bigger than they certainly are now. 4 or 5 million, that's a private company, isn't it? Can you even be a public company with that? How far does this thing go back? Let's take a little longer look at this. Well, man, this thing's been in a horrible trading range, but man, this thing looks like it's going out of business with a chart like this. 10 million is not a lot to be making in this business environment right now, certainly to remain public. But we'll have to worry more about that. Others stocks that get the losing horn. Restoration Hardware, it's been down about $40, got to 37 today. This thing's been on a one-way trip since $100.49 on November 4th. Man, I didn't see anything in this that really, I mean, you had I guess you did. You had a huge quad high, or maybe even 5 pushes to a high, June 30th, December 18th, March 30th, July 23rd, and then November 4th. But even energy up into that high from the August 24th low into it. So I wouldn't have shorted it, but I wouldn't have been long either. Going up against the previous high at 100 and 102 with about 1.5, 1.6 million shares. So you had 2 little peaks above it for about $3 or $4 with no volume. But, that energy on the way up is fairly decent. So you have to continue to worry about that. Anyway, we have Mike in Toronto. How you doing, Mike?
Yeah, hi. Thanks for taking my call. You're looking at some dog stocks there, I noticed, and I wanted you to look at Sears Holding, ticker symbol SHLD.
Mm-hmm.
Sears Canada sold off all their leases in Western Canada in the past week to a furniture company, which is expanding into Western Canada. Mm-hmm. And this chart looks ugly. Yep. I guess on the weekly and monthly, do you foresee a potential L-shaped pattern where it's heading into bankruptcy?
Yes.
Where Eddie, Fast Eddie, I guess we can call him, basically loses everything?
I don't think they lose everything. I think these guys have been paying themselves enormous salaries.
Yeah.
I mean, there's a whole point to the way that a lot of these companies that know that they're cooked go out of business. And this stock is perpetually 50 or 60% short. I don't think you can find any shares to short on it.
Geez, that was my next question. Is on a technical rebound, where would you go short?
I've tried 100 times. This is almost like GoPro, in the fact that that people back in it's even farther than a year ago, were paying 15 and 20% premiums to get shares short for Sears, and so I don't think they're getting out of it in any time soon. So you'll ever find any shares available. But I've talked about these. I've talked about stocks as the night of the living dead. And these things, the whole point is to kind of feast off the dead bodies of others either you're real estate or whatever, why you give yourself huge and huge, as the Donald would say, benefits and bonuses and everything else. And of course, in the very end, there will be a flock of lawyers that are all over this like flies on the proverbial excrement, and they will suck out any cash left to make sure that both bondholders and nobody has any cash left. These things are basically fiefdoms at these points and are set up to do exactly that, suck all the cash out of these companies before they go bankrupt. You can kind of look as Radio Shack as that model. It took 2 years for that thing, and they were virtually bankrupt for 2 years. And everybody keeps on thinking that these things are going to come back. But I don't, unless anybody can come up with some kind of even remotely insane idea on how Sears comes back, it's beyond me.
Okay, so the way to trade this is through leap puts.
If you could have gotten them at the right time, yes. The problem is, by the time that their nasty books actually showed up, everybody knew it, and that's why there was a huge premium on the downside for those shares. It's the same thing as GoPro. GoPro, when it was $95, you would have had to go short at $112, something like that. And that meant that it had to go down $17 just for you to break even. And there's that kind of premiums. But Sears was one of the first of these companies. I'll go back a little bit farther. One of these companies where I did ask my broker what the premium was, and it was like, I think it was like $15 when it was $50. So you would have been short at $65 when it was $50. So everybody, this is a story that no one is not fooling anybody. And the exact same thing with BlackBerry. It is
Let's say we have a nasty short covering rally in Sears Holding. Where's Confluence here?
Retracement.
On the dailies. Dailies versus the weeklies.
Well, I don't really care whether they're dailies or weeklies or monthlies, but because I go from the absolute high to the absolute lows, whether it happened a week or a month.
Is there any white knight out there that's going to save this company?
Why would you want their stinky stores in the stinky parts of town?
China.
No. They've tried. I've seen 5 different phony stories. Sears Holdings for phony stories is almost as good as BlackBerry, with phony stories of selling patents and land and everything else. They are going to suck this thing dry. They are vampires. Okay?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're trading out at 1942 on the S&P cash, 2.76 billion shares, which is fairly light. But I suspect that we are probably going to see a slow trudge up into fund buying next week. And why everything is saying fund outflows, I think what we could see, of course, is them move it up to the highest prices on Wall Street and make sure that the funds buy there because, of course, suckers never get an even break. But is there giant here? Is there anything I want to buy? The answer is no. It's just that the risk reward is pretty poor for any downside. It's not that much better for the upside if you were going to buy something here today. So if you're long, maybe you can get a little bit of a squeeze into next week. I would like to see kind of a light volume pullback to set up some kind of tradable low in this market and in the S&P cashes. Certainly if we started seeing this market act correctly again, i.e. China down 6%, we go down, that may change my mind. But I think that kind of divergence has got to be enough to change your mind. I think Keynes said it the best. I'm trying to remember his first name. But he said he was rather famously in an argument about stocks with somebody. And he said, when the facts change, I change my mind. What do you do, sir? In a famous argument. And when things change, because they do, you as a trader should change your opinion also. Anyway, we're talking about Sears Holding with Mike from Toronto. It was Mike, wasn't it? Yeah, Mike in Toronto. He asked a very good question, and that was, where is confluence for Sears on a short squeeze, if you could get one in this market? It's at 1973 to 1981. So pretty good number right there if you could see a squeeze coming. The problem is that there are a lot of people that have a lot of shares short. And, of course, as soon as this thing really rallies, they're more than willing to heap on the bad headlines, the downgrades, and everything else. If you were talking about maybe an intraday trade on a move on that, maybe for that, there are a lot of shares short. But we've called them vampires. We've called them zombie stocks. If you continue to look at any of these shares on stocks that just look like there's literally no business plan that anybody's come up with that say that Sears Holdings does not go bankrupt. Same thing with BlackBerry. What is that, BBRY? I haven't looked at that one for a while. BBRY. But all these stocks have kind of a similar pattern, and that is that they will kind of bounce back and forth. And then eventually they go to $2, then they go to $1, and then everybody gets surprised. BlackBerry out of business. Radio Shack out of business. Sears out of business. Horrible, ugly charts. And I don't think there's anything out there that makes BlackBerry anything else. But what I do see a great deal of is, and especially you want to look for it in these stocks that are bottoming, and that is stories that have absolutely no basis in fact. I think a year and a half ago we talked about this, and everybody wanted to know about it. And the whole thing that they were pushing on BlackBerry at the time was that it was going to sell all its patents. Well, they kind of have already done that in the fact that if they go bankrupt, all the patterns revert to the original patent holders that they bought those from, so they really don't have much. They've already cross-licensed everything already to companies like Microsoft and Google, so it's not like they can sell them again. If they go bankrupt, it's the bondholders that will get any kind of money out of those patents. So there's almost nothing to this company. And besides that, Canadian companies have a problem already. It's called a thing called a connect discount in tech companies. And always kind of very interesting to see a tech company in Toronto or in Canada, because you generally only see a valuation compared to the U.S. companies, basically the same kind of earnings, at about 25%. The problem has always been that the best people in Canada get huge offers for huge wages to come to the United States, and it is very hard to ever keep those folks. In fact, a great deal of BlackBerry's Mind Trust ended up, of course, working for Apple. And there's nothing you can do about it. You can pay them a great deal more, offer them a place to live that's probably a little bit warmer, and many times, as a lot of these new employees for Apple are, they're in low-tax states like Arizona or Texas. So, you can move from Canada, become a U.S. citizen, pay a fourth of the taxes or even less than you're paying up in Canada, and have some warm weather, not freeze to death. You can always go back and visit Canada. But there is a well-known thing in tech, and it is called the Canuck discount for technology. And like I said, it is not uncommon to see valuations at about 25% for Canadian companies, just because they know as soon as everybody starts doing well with a Canadian company, they get looted ad nauseum for anybody that knows anything about their business. Bernie, going to export Bernie? That's interesting. Other things of interest. Yeah, we're up 12 points on the S&P cash. 2.8 billion shares. Dollar index is not done much out here. It's off 12 cents. Trying to see if there's anything else out here. IWM's up 70 cents. Not a whole lot out here. So you kind of have to continue looking at a great deal of these and figuring it out. But let's see if there's anything else out here that I wanted to look at. Move a few things around. Halliburton is going to be firing a ton of people. They're back to flat on the day. Let's take a quick look at them. I saw it come by just before the break, and it had kind of a nice little reversal on it. I think it was down 50 cents when I was looking at it during the break. But this one, the big problem is you just don't have that much higher to Confluence. Confluence comes in very well on this at $36.07 to $36.12. So you got about $3. You're up against a heavy volume gap down that goes back to, I guess, at least a decent gap down that goes on 11 million shares. Today, we're 10 million shares. So you got a couple of gaps. That takes you through 34. You've got $36. If crude rallies, could this go up higher? I think there are much better charts out here than Halliburton. Probably everybody in the either the Exxon kind of big conglomerate, or maybe Valero in the crack spread level. In fact, look at Valero today. So, any of these companies out here, volume up higher, everything well, that's not today. That was yesterday, wasn't it? Yeah, that was yesterday. I got to get back. We'll update that chart. There we go. A little hanging man out here today. We'll be back in a minute. You can call me at 877-927-6648. You can email me at path@tfnn.com and put a message in the dim.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Valero, anyway, light little pop up to the heavy volume down day. So now is where we're going to start running into resistance. That down day of the February 5th, 9.2 million shares. We're into with 4 million shares today. You had 8 million shares yesterday. So you got close yesterday as you went into that candle, but not a lot of follow through today. So can we kind of vacillate and build up some energy to go higher if crude does go higher? I think the answer is yes. But we can look at it. One of our gentle listeners posted to me via email. Halliburton said it's slashing 5,000 jobs, or 8% of its global workforce. The latest sign of weakness in the energy sector struggling to cope with a commodities rout. I certainly wouldn't want to be in anybody that's involved in offshore drilling anytime soon, because my guess is that you would still see and continue to see that the money would flow into frackers first with a lower cost of production than offshore folks. Valero, kind of interesting. Of course, a big refiner, Valero. I had a question earlier, and I was hoping to get to it today. Maybe we can talk about it tomorrow. That is exactly how do they distill gasoline, and what are the technical issues with it. Maybe I'll just send out a video on it, but it's pretty straightforward. Basically, when you think about it, anytime you pass one of those giant facilities, you can just see how large they are. But for the most part, you have a giant tower. They bring the crude in, they boil it, and basically do the same thing that you do for many items like alcohol, where you boil it into a vapor and then distill it out. Depending on how heavy it is, will depend on how far up the tower it goes. So at the very top, you have naphtha. Can't even say it, naphtha. And at the very bottom, you have asphalt. And in between, mostly in between, you have a lot of gasoline. Depending on the kind of crude it is, you certainly can try to move more of it into gasoline than another one by using catalysts to break those chains down. But basically, they're all molecules of hydrogen and carbon, i.e. why they're called hydrocarbons. And the whole process is to break those bonds apart, especially in the more gooey stuff, and also trying to get rid of as much sulfur, depending on how much sulfur is in the oil. But that's kind of a Reader's Digest version of how crude is actually brought in and turned into things. That's it. They've got a giant tower, and the lighter things go higher and the heavier things go lower. And they continue to run them through over and over again with catalysts to break out as much of that nasty stuff into things like gasoline that brings high dollar. And then some of the stuff up at the top of the end is literally gas, a vapor that they put in bottles and that people actually weld with. So if you ever wondered where a lot of that stuff goes, that the oxyacetylene welders at the very top of a crack refiner. In the meantime, sell when you can, not when you have to. Oh, and this is the last chance for you to sign up for Andy Heck's webinar tonight. Do so now. You will be disappointed if you don't. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.